This is actually on the market now. We were assessing this deal at a high level for a client, and it didn't check out. So the tenants didn't check out. You've got a lot of due diligence. It's a very complicated deal, a commercial property acquisition. I've also purchased a commercial property this year for just over the $2 million mark. It's residential/commercial. Look at this property. You know, we generally stick to these large industrial storage type business types properties, low maintenance. You're putting them into areas that have a lot of industrial demand, a lot of supply, new homes being constructed, employment going in there. This is just over $2 million. It was $2.4 million originally. We got it down to 2.06 in our negotiations, and then the due diligence didn't check out. Okay, it's still on the market now. We like these because they're big concrete blocks, low maintenance, 30 years until we're going to have any issues. Clients, the tenants pay for outgoings, right? Rates, waters, maintenance. This one, 2.06 million. The net positive cash flow, usually it's on here. They might have changed the ad recently. So where is it? Net positive cash flow. So hold your hat. Where is it here? Net positive cash flow of $197,000. Okay, so all you've got to pay out of that's coming into your pocket on 3x3 or 4x4, 5x5 leases, year leases. That's coming into your pocket. From there, you might need to pay your insurance, $5,000 a year. It's generally quite reasonable for this size of property. Your property management, about 5% as well. And then your interest repayments on an interest-only loan, you're left with $120,000 positive net cash flow in your pocket. Now, this might be, you know, this is for someone that's maybe wanting to generate a larger net positive cash flow position. This might be too high a risk for you. But what I can say is it's the same concept. It's the same. Let me just try and think of the other addresses. There are other options. That's at a $2 million price point. Okay, and this is the same concept. This was another client purchase last year. Same concept. This was purchased for $490,000 plus GST. From memory, this is and this was smack on the buzzer at a net return of $49,000. All right, so you've got your three things: your insurance, your property management, and your interest repayments, bringing this one down to $30,000 net positive cash flow. It's 1/4 the price, 1/4 the return, almost to the dollar. It's the same concept. It's a concrete block. You've got very long-term stable tenants in there. This art business had been there for 20 years. This painter business was booming, lots of new homes being constructed in the area. And the thing I love about these concrete blocks is look at the roof area. You can lease your roof area to solar companies for 25 years and get $10,000 a year rent. So you've now got an extra tenant. This is why we like these types of properties.